Welcome, everybody, and thanks for joining us. We are very happy to see you here, and we are very happy to have this talk by Dr. Izvorski on Kazakhstan paths to greater and faster growth and development. I was jokingly before saying it's a presentation on Kazakhstan 3D because it's about dependence, distance, and dispersion, which you will see from the presentation if you have not already seen the slides, why that's crucial for creating the condition for making Kazakhstan development even more. The floor is yours. Dr. Izvorski has a Ph.D. in economics from Yale University. You know, a good place to get a degree. And he's been a lead economist for Central Asian region. And without any further ado, the floor is yours. The presentation is going to be 40 minutes as usual, and then we have 20 minutes for Q&A. So hold your horses. You will have plenty of chances to ask questions.
Okay, thank you. I have a mic. Thank you. No. Okay, so thank you very much. We started this work because when we discussed with the government and with people like you, academics, students, the issue of very slow productivity growth and actually slowing productivity growth was very important for the country. In the 1990s, in early 2000s, growth in GDP quickened to as much as 10% at the start of the 2000s. When growth is 10%, the government, everybody, you can do a lot, right? It's a very different economy when you have 10% growth. The future looks better. You can do many policies. You can spend a lot on education, on health. Now, growth subsequently slowed to 2%, 3%. What do we project now? That's around 3, 4. So when growth is 2, 3, 4, and you subtract population growth of about 1.5%, so with per capita growth of 1, 2%, things look very different, right? All of a sudden, you appear constrained, even though you're very dependent on oil. There seems to be a lot of oil, but somehow with slower growth, things look a little different. And so we thought, okay, why don't we work to try to see how we can place this slowdown in productivity growth, this dependence on natural resources, but in a spatial context. Very big country, 3,000 kilometers from east to west, with 6 people per square kilometer on average. Very low density, very dispersed around the country. So this is what we started to do. Okay. So this is pretty much what I just said, our motivation. A lot of resources, sparse population, substantial regional inequality, Almaty, think of some other less developed region. Internal mobility has started to pick up. A lot of people, highly educated, we're going to come to that, coming to Almaty. Those with less education cannot. And a structural transformation, which to some extent is what was the transition from plan to market, but structural transformation has to happen all the time in any country, in Denmark, in the UK. But more importantly, a stalled, very slow down spatial transformation. I'm going to explain why. So here is a little bit of what I just said. You look at growth per capita on the left chart. Growth per capita. GDP per capita increased substantially through 2014 when oil prices were very high, and then has largely plateaued, has been flat since then. Not just here, also in other countries I pointed to. If I plot Russia and Malaysia, would look very similar. So it's a problem that Kazakhstan shares with many other countries. Average growth rate, as I said, from about 10% in the early 2000s, has slowed down now to 2-3%. So very substantial slowdown. Same with productivity growth. Total factor productivity, you see the line, how from more than 2%, so a decent one, has actually been contracting for the last 10 years or so. And when you accumulate this, when you take this cumulatively, obviously makes a huge difference on this chart. I'm going to point to you these two countries of Australia and Canada as very important. And they're very important because even though they're much richer, they have huge territories, have the same sparseness of population, have a lot of natural resources, but you could see what a difference it makes when you, I'm going to talk later, when you allow people to go and firms to go anywhere they want. In Australia, they're essentially along the coast, east coast, a little bit on the west coast. In Canada, they're essentially on the US border. In Kazakhstan, they are, a lot of the people are in the Almaty region, in the Astana and north, but there's quite a bit spread out around the country. Very important competitors for Kazakhstan. Here is an interesting chart that shows what are the resource rents for Kazakhstan. Resource rent is when you extract oil, you sell it. Let's say it costs $100 per barrel. Let's say it costs $6 a barrel to extract it. 10 minus 6, sorry, 100 minus 6, 94. This is the rent. This is the pure money that comes out of the ground. You haven't worked for it. Kazakhstan on average has been getting 17, 18% of GDP a year. Look what a large amount this is, 17, 18%. This is almost, not exactly, almost as much as all your fiscal revenues. They're a bit larger, 24, but this is a huge amount of resources that comes to the government, to private citizens, to companies. And so when it comes like that, so this is the dependence, when it's so large, it makes many things possible, also makes some things problematic. It's very difficult to develop other industries. And as you see, exports of manufacturers are much smaller because exports of commodities are so much larger. I'm putting this here because at the end of the day, for us to understand the structural transformation, the spatial transformation of the economy, you have to understand that the public sector is still very large. Here we've plotted the OECD countries, and we've put Kazakhstan there. And you can see relative to the countries with which the government likes to compare, right? Because the government aims to be, or at least aim to be, one of the top 30 most developed countries in the world. It's a natural club, if you will, towards which to aim, but so very substantial public ownership. And without any comments, corruption perceptions are very, very substantial, meaning when you have this large amount of public ownership, of corruption perception, it's very difficult to reform some of the economy. Here is what I was talking about earlier, a most telling story of a stalled spatial transformation is the fact that the urbanization rates of the country, which used to be 20% of the whole population in the 50s and the 60s, rose fairly rapidly to 55 or so in the early 90s, fell down a bit after many citizens left, but then it has been largely stuck at 56, 57%. Means the urban share of the population is not growing. We look at Australia, this number is 86%. In Canada, is 82%. And so therefore, I think this is important that there is a unmistakable one-to-one relationship between income per capita and urbanization. No country has been able to become high income over the last 70 years without substantial increases in urbanization. Kazakhstan is not going to be able to become a sustained high income economy with this flat urbanization profile. So in summary, I think the three main challenges, at least in this context of productivity with a spatial lens, these are the top three main challenges. Dependence on resources, large, substantial differences between population centers, firms, dispersion of the population, and obviously from that comes the division. Some areas are much richer, others less rich. I put this last point, the legacy of the planned economy, because to emphasize that You know, this point that some people mention as you only urbanize once. So you only create a city once. Once you pick a place and create a city, this stays with you for a very long time. Once you pick a place to put a billion-dollar road, it stays with you and determines population patterns, firm development for a very long time. So it's the legacy of the planned economy. I mean, only 30 years ago, the country gained independence. It stays with you. The roads, the direction of trade, and so forth. And so the incomplete transition, I mean, to some extent is the incomplete transition from plan to market, but it's also, I want to make this a bit more general. It's a transition that every country, I mean, you have to constantly change. The world is changing so much. It's going to be difficult for Kazakhstan to stay in one place. It's not a good ambition to say you want to be stable. You're stable in a changing world means you're falling behind, right? I want to talk here very briefly about these two concepts, the structural and the spatial transformation. Structural transformation, you understand what we're talking about. This is the changing structure of the economy. At some level, this is from agriculture to manufacturing to services. At another level, it's also from less productive to more productive firms. If you have more productive firms in one place, less productive to another, do people move to the more productive firms? Does, let's say, the machinery of the less productive firms, can it easily go to the more productive firms? Do banks give less credit to the less productive and more credit to the more productive? So this is the structural transformation. The spatial is something very similar, of course, but do firms and people cluster together? Do they congregate together? Do they concentrate? This is an unmistakable signal for growing developments, where firms are next to other firms because they can exchange experiences, not necessarily by managers talking to each other, but through sales, through managerial practices and so forth. And so there are two issues, that at least two debates, or at least two types of debates on what drives the structure and the spatial transformation. One is what I think, well, one is the viewpoint that it's actually institutions and there's a market-led model of development. You allow market forces, the forces of agglomeration, right? People go where they want, firms go where they want. This creates concentration of activity. Then there are obviously lagging regions. Then the government could look and say, hi, where can we adjust for any market failure? Maybe there are substantial market failures. Let's try to clean as many of them up to assure that people can indeed move where the jobs are, right? No need to stay where there are no jobs. Firms can move where the markets are, and they typically tend to be where there are other firms, where there's a substantial share of the population, or near the borders. In Kazakhstan, as you probably know, 75% of all import-export trade, excluding commodities, happens in two regions, Almaty and the region, and Nur Sultan and the area around it, 75%. So it makes a lot of sense for manufacturing and service firms to be in these areas. Now, the other model is what pretty much China did, is where we say, well, you know what? We're going to build a lot of buildings. We're going to build heavy roads, a lot of heavy infrastructure, and this is going to drive the structural change. And the only problem with that is that this often doesn't work. Works in some countries, it's worked in some places. In most of the time, most of the cases, it hasn't worked. So I just want to flag these two issues. We can talk later if we ask me questions on it, but not to slow us down now. So as a result of what we just discussed, so there are these three priorities, if you will. The stalled productivity, as we said, productivity growth has slowed dramatically, output growth too, right? The mobility of people in this case has been constrained. We'll see that mobility has increased, but nonetheless, it's not what it could be given the size of the country and given the challenges. And finally, this connectivity. And it's not transport linkages. It could be that as well, but it's more our firms connected, our people connected, right? Obviously, we have internet today. You don't need transport for everything, but it's also not necessarily the transit corridors. It could be within city connectivity. So it's all of these things together. An important issue that always comes at this point is we have lagging regions. What are we going to do about that? And I'm going to talk later about this, but now I want to flag what I just mentioned, that allowing these market forces of concentration, right, and mobility to take hold. So people move, firms move, and then governments then come and say, what are the market failures here? Is there some local monopoly? Is there some particular problematic issue? Maybe certain place doesn't have access for whatever reasons to the qualified students of Nazarbayev University. There is such a profound lack of skills for some reason. So are they market failures? Let's fix it. And after that, if there's still no solutions to some of these lagging regions, if still there are people who do not want to move, what do? We call this place blind or spatially blind policies. You provide same quality education, healthcare, social services in lagging regions and as in advanced regions, right? You do the same everywhere. And at the end of the day, this turns out to be a much cheaper option for society than trying to build cities in places where cities are not going to grow, or put special economic zones in places where nobody's going to come, or build transport linkages to places where nobody would be able to take a truck because nothing is being produced. So we'll talk about this a little bit later. So of these three, I'm going to go one by one. And the first one is productivity. Let me know later in the questions if this is something that is of interest, because it can be a little technical, but we took this interesting database, firm level database from the government, and we looked at it and said, how can we decompose average productivity in the economy as proxied by these firms? And then we said, okay, there is this component which we call the within component. This is the component within each firm. Is the firm productive? Does it innovate? Is its management capable, and so forth? Then the other component is between the firms, right? If one firm is less productive than the other, and the resources of that firm, of the less productive firm, can move to the more productive firm, obviously average productivity grows up immediately, right? Whether this is within the same city in Nur Sultan, it's across the country. So these two components. So here is, can I do that? Yeah. So, oh, I can't, okay. Because it's a PDF file, I have a little, well, anyway, you would see later when we send you the PowerPoint, you could play this down. But so here is the within firm growth, and what are these firm capabilities, as they are called, that ultimately determine human capital, the level of education, skills of the staff, of the people working for the firm, the managerial and organizational capital, and whether the firms use adequate technology, changing technology, and so on. This is within. Between is what I was mentioning earlier. If resources are not allocated properly in the economy, and distances, government policies, lack of managerial capabilities, anything else, lack of resources, limited access to finance, if you can fix this, it's a huge, huge, huge driver of growth, the between, shifting from less productive to more productive. And the final element is this entry and exit. No? If some firms are not successful, it doesn't need to be a shame, right? It's no shame to not be successful in the marketplace. You can just exit. In many countries, this is a big problem, exiting. But if you could exit so that other firms could use your machinery, could use your workers, I think that's a very positive for the economy, and ultimately is very positive for the workers. Similarly, so this dynamics of entry and exit, which is often called creative destruction, right? You have a crisis or you have changes, something is created, something is destroyed. We can talk a lot about what happens to the workers because it's not very easy. This sounds very sterile, very easy. It's not like that in general, but in the long term, obviously it's better for workers to go to a more productive than stay with a less productive firm. We've done this decomposition. I don't know whether you have seen this. So we've decomposed the productivity growth over these 10-year periods we've decomposed it into these 3 components, actually 4, because we've separated entry and exit. And you see the various colors there. Here are the 2 conclusions we get, that for manufacturing firms, it is this within firm, right, growth that has been the main driver of productivity increases or of the dynamics of productivity. Again, if you remember, over the last 10 years, productivity growth has really collapsed, but whatever the dynamics is, it's this within firm. In services, it's a little surprising, but it's due to the exit of unproductive firms. Same here. I'm going to skip this, and you can look at it later. And just broadly, in summary form, here the 3 components of the productivity growth: within, between, and this entry and exit. And here are some recommendations or thoughts on what can support each of these components. I put economic freedom here because at the end of the day, when you don't have people who can move anywhere they want, study whatever they want, work, don't work, or firms who can move where the markets are, nothing is working, right? So I think it's such an important aspect of anything one talks about when you talk about the economy of Kazakhstan, that you need more economic freedom. And we've talked with this, when we talk about this, often we talk about in the context of trust. And I think at times you can hear people saying, well, people don't trust the government. And so obviously when people don't trust the government in many countries, it takes a lot of time for the government to regain the trust of the citizens, no? It takes a long, long time. But it doesn't take a lot of time for the government to trust its citizens, no? It's can write a decree, can write a law. It's very quick that the government could say, you know what? We're gonna eliminate Propiska address registration completely so that no matter where you live, you don't need a Propiska for your children to go to school, as is the case now. You need a Propiska, or you can go to school only in the place where the parents have address registration. So I think that's to me, this is the key. That takes a lot of time for the citizens to trust this government, and it's perfectly fine. But the other can take a day, 2, a month. So this is the second component of this productivity, mobility, connectivity agenda. So here we've plotted the vertical axis. These numbers are percent. The average, the cumulative over the last 5 years. And it shows here what percent of the households of a particular country have changed location. And by this is either a city, a village, or something distinct, not within Astana, not within Almaty. What is the percent of the household who have changed the place of residence? And you see, in Kazakhstan, there's a bit of progress. 2014, the data suggests 5%. 2019, a bit more, maybe 6 or so. Even though there's an increase, I mean, you can see, you take a look here in the middle, all kinds of countries from Honduras to Mongolia to Ecuador have a much higher migration rate. So this is important because this suggests that for whatever reason, people are not necessarily moving. And we're going to talk about the reasons. And one of the main, as we said, one of the main drivers of better levels of household incomes, lower poverty, is people moving to richer locations. Now, what's interesting is to see who is moving, who is migrating. This is domestic, internal migration. And you see the 2 surveys, 14, 19, and you see that it's largely those with middle level of education, high level of education that are moving. Those with lower level of education, so therefore those that command lower wages, that are likely to be with the lower standards of living, they're not moving. So when we talk about that 5% mobility in the previous charts, and this here for the highly educated people, this works out to be about 9%. And so therefore of those people with low education probably works out to be 2-3%. They're literally not moving. They are where they have been over the previous 5 years. Why are they not moving? 3 reasons. One is very expensive. Housing is very expensive. I mean, the cost of living is very high, right? Cost of living in Almaty, which is the number I remember, is about twice the national average. Here, the housing is not affordable. So here we show 2 bars. The bar on the left is the average amount of spending on housing. And because a lot of people own their houses, so this is also what we call imputed rent, either rent or imputed rent or any cost of housing, the average amount of cost of the housing cost within the total budget. So you can see in Azamat's birth town in Kezoruda, it's about 15% of the budget, household budget, is spent on housing. In Astana city, almost 44% is spent on housing. These are very, very high numbers for those places on the right. No? And then the right bar is the percent of the population. So for Astana, 78% of the population has housing expenditure that is above 30% of the budget. This is truly, this is very high. No? With minor exceptions, almost everybody in this area, in Astana, spends more than 30% of their 30% of their household spending is on houses. So unaffordable housing, a big reason why people cannot move. I mean, another reason is that because many people own their homes and there is limited supply of new homes, the rental market is very small. You probably cannot even see this, but there are two colors right here and top. And the top color is the size of the rental market relative to number of people who rent versus those who own their home. Very small rental market. It's very difficult, obviously, to go to a place and rent. So this is the second reason why we have difficulty in mobility. And the last but not least is this registration system. I mean, it still applies, even though it has been simplified. There are many issues, but nonetheless, application for unemployment benefits require registration, and it comes with the registration and 2 examples. And the second one is to enroll your kids. You need to be registered where you want to enroll them. So I think it's a big problem, something that you probably have thought about and you have discussed for sure. A big question, is this even necessary? And we've talked with the government here on this. We've talked in Uzbekistan where there has been very substantial reform, but they are also, there's an issue also with which they're struggling. And we hear 2 answers. One is, well, we want to know where the people are. So this I am not sure I understand. Why do you need to know where the people are? The second has a bit more of a rationale. We need to know how many new daycares and other facilities we want to build. But certainly that could be done in a different way rather than link school enrollment to the registration, right? Just so you know how many more daycares you build. And so I think it's a big question about this registration system. It's part of my comment earlier on economic freedom. Maybe you don't need this. Not maybe, for certain you don't need this. There has to be a way to find out where the people are for planning purposes, right? You want to build more schools, you want to build more supermarkets and so forth. I'm gonna stop here. Now, the third point, productivity, mobility, connectivity, trade. I'm coming to this now. And the issue with connectivity and trade matters, right? Why do 2 places need to be connected? Well, one produces stuff that the other place needs to buy. And so therefore, it's important that there are good connections, there are good opportunities for trade. So has manufacturing, in this case, become more concentrated? This is an index on the left scale. It's an index of the concentration of production. It's proposed by an economist called Edward Glaser. Higher values means more concentrated. It can go much higher, can go to about 2. But nonetheless, if you look at 2014, the left bar, 2018, the right bar, obviously, in most of the places we have here, most of the areas, you see an increasing concentration of manufacturing. This is very good. The market forces of agglomeration are working. They've been allowed to work, they're working. Now, what manufacturing activity is becoming more concentrated. What about trade? And this is very interesting. So the horizontal axis is distance in kilometers, right? 1,000, 2,000, 3,000, 4,000. This is 33,000, 3,300 or so, the maximum distance or so in the country. And the left one is the contribution to intra-regional, right, within the region, and inter-regional between regions trade. So this is the interesting thing. So if you look here, this point, this is about 500 kilometers, and this is about 60%. So what this says, what does this say? About 60% of trade within Kazakhstan happens at a distance of 500 kilometers or less, 60%. I mean, this is huge. This is very similar to the number for the United States. I mean, almost 2/3 of trade happens at not a very long distance, no? 100 kilometers, 80 kilometers an hour, you know, 6-7 hours distance. So as distances grow, trade doesn't increase that much. I mean, obviously it has to come up to 100% at the end, but so this is important and this is very good. Now, but what these two charts suggest is that with the reduced transportation costs these days, you see a very different opportunity for development of various regional centers, no? 50 years ago, or 100 years ago in the US, in the UK, but maybe 50 years ago here, if there were market forces at that time, you probably would have seen much higher transportation costs, right? And so therefore you could have said, well, you know, if the transportation costs are so high, maybe this little city here some little city could be a viable center. Now, when the transportation costs are not so high, then it doesn't make much sense to have these dispersed cities around the country, no? And so therefore, I think we have this interesting conclusion. I mean, there's a lot more data, I'm mindful of the time, is that globalization, this increase in trade and concentration of manufacturing, this globalization is increasing the spatial concentration within the countries, but also is making it difficult for these global value chains to spread regional developments within the countries, no? Because these value chains maybe end only in Almaty or within 500 kilometers from Almaty. And so therefore, these developments around the world over the last 40, 50 years, in Kazakhstan a bit more recently, are making it so that we cannot say, well, globalization is force for regional development. It's force for development, it's force for growth, it's not definitely a force for regional development. I mean, very similarly, these commodity exports also do not result in spreading regional development, no? Oil is extracted, it's shipped abroad, doesn't create much regional value added. And so, is there a problem? I mean, there is a problem. There is a problem which says there is a role for the government. Right? We've had these discussions in recent days with some other audiences here in town, and we sense that this issue raises the question of, we've made this transition, maybe not complete, but we've made substantial transition from plan to market. How come this has not been fixed? We have reduced the role of government, again, not fully, because the role of SOEs is still very substantial. Connected firms and connected banks are obviously also very substantial, but nonetheless, we've made so much progress. Why is this not being fixed? And the point we've been raising is that the transition, even if it were complete, the transition doesn't mean that there's no role for governments. quite the opposite. There's a very different role for government, including the role for government to watch out for market failures, where markets do not work, right? And so therefore, adjust these market failures. Maybe some firms were privatized and there was a state monopoly in a particular industry, now we have a private monopoly. Obviously, it's a failure, has to be addressed. Or regulation, appropriate regulation of the banks, of firms, and so forth and so forth. So this point that when you allow market forces to drive efficiency, there would be an increased concentration of production. People would go to places where there are the jobs, where there are other people, where there are good universities, right? And that creates this disparity. This obviously creates regions that run ahead, and then there are those that are behind, that are lagging behind. And so it's the presence of these lagging regions has created calls for policies to address this. And we call these policies place-based policies, right? Because they're focused on a particular place. They're not horizontal for the whole country. They're not what we call place blind or spatially blind. They are place-based. They focus on place. Let's do something in Karaganda. I'm making this up. Let's do something to develop a special economic zone here. Let's build a road there, right? It's not in general. And so these place-based policies, part of the problem with them is that, I mean, obviously they come as answer to populist calls. Let's do something so that a region can reach its full potential. Let's do something so that there are jobs. The places where these people who are pensioners now used to have jobs, now have very low pensions. Let's do something so we revitalize the region. And so typically what tends to be done are these three instruments I've listed here, something on the local development, something on special economic zones, or something on infrastructure, whether it's roads or something else. The main point about all of these, and certainly some of them have been successful around the world, main point about them is that often they commit huge investment, huge amount of money by the government. The outcomes, unless they're very properly done and planned and executed and monitored, the outcomes are often not very clear. So very quick over two of these instruments. First, on this local development policy, territorial development policy. In Kazakhstan, the government has had territorial development policies for more than 15 years. The one we focused on this report was the one that ended in 2019. There is a new one from 2020. It's somewhat similar, but also has had a lot of improvements. And the main point of this one, which I think the new one is trying to address to a certain extent, is that in this one, there is a very good assessment of what the problems are in terms of underpopulated cities, low urbanization rates, low mobility, spread out population, dispersion. So the diagnosis is very good. And the recommendations are, let's focus on these place-based policies to fix that. And again, this is fine, but then the allocation of funds to these policies is not sufficient and is not actually aligned with the ambition of this. So there is, as we say, there's a compromise between a nod to let's allow market policies and agglomeration to take hold to let's spread development. And this one, spreading development, I think it's one of the worst ideas of territorial policies around the world. Because often people say, well, we need to have equality. We don't need to have equality, right? You don't need the population to be evenly spread around the country or development to be evenly spread. You need development to occur where it occurs because there are other firms, there's trade opportunities, there are natural resources, right? So development, as we call it, is lumpy, right? It comes in big peaks, in big mountains. But what we need is equity. So no matter where you live, even if you live in Astana, next to Nazarbayev University, or in some village in the middle of the country, you have to have the same access, or pretty much the same access to education, healthcare, social services, right? So we don't want to spread development evenly. You want to spread equity opportunities. So anyway, this is what I was talking earlier. You would see this later. We can chat if you want more details on this. But this is the spending by the State Program for Regional Development. So, you know, even though it says the aim is territorial development, the amount of money spent on territorial development, all these 5 things on the left, is not very substantial. The huge chunk of the money still went into infrastructure and basic services. So you could say all of this was needed, but this was not the goal. This was not the goal. This was not the ambition. So I'm going to say here that the way we, at the end of the day, do I have more time? 2 minutes? Okay, I have 2 slides. So for territorial policy, we have these 3 main thoughts of how this in general can be improved. One is to change the whole narrative, to change the mindset, and to say, even though we're talking about spatial distribution, spatial allocation of factors of production and people, focus first on the structural reforms, right? Focus first on the structure, because it's not possible, as we showed earlier in this debate that I quickly ran through, it's not possible to be building roads and cities without having the freedom of people to move around, no? The mobility, without companies being enterprises, especially the medium size, not able to borrow, credit has been declining here and so forth. The second thing is, it's important at this level of the country's development to empower local governments. Now local governments under this territorial development program, they apply for grants from the central government, but the parameters are set by the central governments. They cannot get out of this. They cannot say, you know what, we want to build schools, but these schools that are linked to local businesses, and then we want to revitalize the city center. They cannot do that. So the parameters are set. And then I think there has to be a way to move towards much more empowering of these governments to decide what is important, what is relevant, second recommendation. And the third one is kind of following from this, is that instead of thinking of this as a system of grants that the central government decides, allow that to be a development fund that actually supports a much more integrated, no? Multi-sector, as we say. Let's allow local governments to say, we want to develop 5 or 6 of these areas. These are our priorities. Affordable housing, rental markets, and so forth and so forth. On special economic zones, we've done some analysis. We can talk in the questions. Because of COVID, very likely, we could not get any data on the 13 special economic zones. We tried to talk to the managers of the zones. We couldn't get a sense that they have data to allow them to assess whether the money that has been invested has led to any success. Around the world, these are numbers for the world. Obviously, special economic zones have exploded. Clearly, China's examples from right after in the early 1980s have been positive examples for many, but how many of these are successful, we are not sure. In Peru, where the World Bank had done a study, out of the 7 special economic zones in the 1990s, only 1 succeeded in attracting investment, which was the goal of the zones. So thank you so much. Appreciate it. Thank you.
Thank you for a very interesting presentation. I have 3 questions. So first question is related to definition of some aspects of productivity. You showed in a slide a decomposition of productivity across sectors. So the question is, what does negative contribution from reallocation of resources mean? Does it mean that some resources are better allocated in some sectors, or does it mean that it was better allocated, it was allocated efficiently, but still we don't see this positive effect from this reallocation to the general productivity? That's the first question. Second question is about why do some sectors experience the negative contribution from reallocation of resources? Does it mean that some sectors are have better access to finances, or competition policies affect different sectors differently? That's my second question. And last question is about the mobility. You showed that, you pointed out that the weak rental market and registration policies, i.e. Propiska, plays an important role in explaining this weak inter or intra-regional mobility. What about the limited job opportunities? Because if there is job opportunity is limited, then there is no point in moving or migrating, right? Thank you.
So thank you very much. On the third one, yeah, you're absolutely right. I pointed out to three factors, but limited job opportunities, maybe poor education skills, right? They don't want to move, even though suppose it's possible to move for a single person. So the Propiska may be less relevant, but skills are poor. So yes, absolutely. There are many other factors. We haven't been able to rank these or estimate what is the strength of each of these. So we haven't been able to do that, unfortunately, on that. On the negative contribution. I mean, so a positive contribution means, let's say a positive contribution means that, for example, if it's within, it means that firms are becoming more capable and they're adding to productivity. If it was negative, it would mean that maybe there's something with managerial practices that makes them, right, less able, less capable, their productivity is declining, or at least they are contributing negatively, they're subtracting from the overall. And similarly from within, from between. If there's a positive contribution from between, it means firms are moving from, or resources or anything else is moving from less productive to more productive firms, right? When it's negative means they're probably moving the other way around. Example, I mean, not in manufacturing, services. I mean, services are notorious, it's notoriously difficult to estimate productivity in services, no? What is the productivity of a bank teller or a barber, no? But there are some services, so you know, there are some services that are very productive, accounting. There's some services that are, you know, retail trade that are less productive. So if there is a shift from, you know, accounting, maybe an accounting firm closed in one location, and then a mall appeared. So there's obviously a much smaller increase in productivity from retail trade, huge increase from accounting services. This disappeared, and then it would show as negative contribution. We don't know. So we had this firm level data from the Ministry of Economy, and I mean, we did whatever we could. We could not get explanations to questions like yours. We could not match it very well with different salaries of workers to proxy for education levels. We did not have any assessments of managerial capabilities. That would be very crucial for the first component, for the within component. So we don't know. I don't know. But yeah, no, thank you.
Hi, I have a question regarding, well, in your slides, you talked about the private sector being quite small relative, like you talked about the government and its role, that it has substantial role generally. When you gave the data, well, the results of the total factor productivity, I just want to know, did you look at like did you compare this productivity in relation to the like the firms that are in public, like that are owned by the government, relative to the firms that are in private, like private sector firms?
We did not, no. Now, just to say, you started by saying that I said the private sector is very small. It's not very small, right? In the following sense, and apologies, it's I don't intend to be abrupt, but all these companies that operate in oil, gas, right? They're privately owned, foreign owned, I mean, also. So a huge chunk of the economy that is focused on oil, gas exploration, extraction, shipment, privately owned, right? So very substantial. Then we're talking about the role of the government in the rest, in the non-commodity part of the, in the non-private part. So, well, sorry, let me start again. So in the rest of the economy, I showed that the share of the public sector, the share of SOEs compared to the OECD numbers is high, right? So that's what we showed. Now, it's not just the state-owned enterprises, no, those that are owned by some casino or others that are not part of it. It's also the state-connected firms, no, that they're not part of that index, but the state-connected firms, private company that is very connected to power, these together with the SOEs, these are the main drivers of lack of competition, no? And it's this lack of competition that at the end of the day limits the ability of new private companies to come in, no? And when we talk about within, between, productivity growth is limited, have lack of competition, you have big problems.
Thanks.
Thank you for your very interesting and very insightful presentation. I have a question that is a bit more of a macro level, I guess. So you mentioned the ongoing debate between two models. One is infrastructure, sort of heavy infrastructure-led model, and the other one institution-led. So I was wondering, in your assessment, where is Kazakhstan in this dichotomy? Because one could argue maybe that Kazakhstan has elements of both, but in reality does not really neatly fit into neither. So I was curious to hear your opinion on this. Where is Kazakhstan in this dichotomy? Thank you.
So, we started this just before COVID. And we came to visit then before COVID for this particular work. And it was very clear that within the government, within society, there is this debate that is reflected in the policy, in the territorial development policy. It's reflected in the meetings we have even now. There's a debate, which one should we pursue? If this was a much smaller, if it was a small European country, I mean, the spatial dimension is much less important, right? As take Switzerland, much smaller country, or you take anything else. Such a huge country. And so therefore, they are not necessarily, I mean, there are some very good examples, as I mentioned, from Australia, Canada, but then there are countries such as China, right? Obviously, that has done wonders over the last 30, 40 years. And it's obviously a competing idea. And this is the idea of let's build it and they'll come. And so therefore, there are positive examples here and there, as I mentioned, but more often than not, look at all these cities in China with uninhabited blocks, apartment blocks, or roads that do not exist. Myanmar built a capital in the middle of the jungle with eight-lane highways that are empty, and so forth. And so there's this debate, and I think it makes a lot of sense to notice that your country, which hopefully in a few years may cross into high income, this debate is going on, and it's not clear. So I think, in my view, this is where your power of persuasion would be very useful to try to shift the debate to something that at least the data suggests that building the institutions, right, building the right policies is likely to create more prosperity than focusing on, building roads between cities that do not trade much with each other, or building special economic zones without keeping track of data and so forth. So you are in the middle because you're transitioning, and not necessarily from plan to market only. You're transitioning with a very changing global environment, no? Everything is changing. Kazakhstan is changing.
Mr. Izvorski, thank you for your presentation. I have a couple of questions, two questions. First of all, related to resource rents calculation. Can you please specify what is the weight in your methodology for extraction costs? Because you provided some examples of the countries on resource rents. Because, for example, in Middle East, extraction of oil is quite, like extraction cost is low, so around $5 to $7 per barrel, while in Kazakhstan is much, much higher. So it may affect on the calculation of this resource rents, right? Second question is more related to global macro level. So can you please specify the within and the between productivity of state-owned enterprises before commodity super cycle and after commodity super cycle ending in 2014, because it's oil and metals, as we know, in Kazakhstan contributes around like 75% of GDP, right? So I'm curious, so thank you.
Thank you very much. On the last question, this database from the Ministry of Economy excludes commodity firms that work on commodities. So this is manufacturing and services only, right? So on the first question, this data is from the World Bank. The World Bank statisticians look precisely at this, right? So they try to estimate what is the volume of production. They value it properly, and then try to estimate the cost of extraction. And precisely your points, right? It's cheaper in one location, it's more expensive in another. And so in the chart, if you see, some of these countries in the Middle East obviously have a a huge resource rents, yeah.
Hello. Okay, I just thank you for your presentation. I just have a quick question. It's loosely related to what you presented, but I actually think, especially in the big cities here in Kazakhstan, even though it's very spread out population, as you talked about in the big cities like here in Nur-Sultan and in Almaty, the traffic situation with the cars is impossible. And I actually think this is a big a detriment to economic growth here, that I don't see anybody, talking about it that much, but I think that the traffic is a big problem and is slowing down the growth.
Yeah.
Is there any, have you heard of this kind of arguments or?
Yeah. No, thank you. This is a very good question. It's a very good and very valid question. In a more extreme form, you have some cities in Southeast Asia, right? Where you have an extreme amount of people have come from the countryside. Agriculture has become so productive. Some of them, however, do not have jobs. They're flocking to the cities, and a lot of cities have become too big before any infrastructure is built, before any schools are built, right? We call this premature urbanization, right? So the city becomes too big before there could be any opportunities, right? And this is in a different context, the same here, no? So the city has too many people for its level of infrastructure, level of planning, and frankly, for the level of affordable housing. So I don't think here one can observe this. In Almaty, around the city, there are all these rows and rows of very low, very poor housing, because these people have not been able to find regular housing, cannot rent, are not registered. So yeah, so I think in a much smaller scale, these problems of premature urbanization are happening here. So we had the talk, Shamsu is our country economist, by the way, chat the other day with the Deputy Akim of Almaty. And so this is part of the problems they're trying to solve. How can they, with limited local resources, when they can apply only for these block grants from the state scheme, how can they build what they think is what the city needs? Affordable housing combined with schools, combined with hospitals, combined with opportunities for firms to settle near where that housing is, so that public transportation is not particularly burdened because it doesn't exist in the shape and form that is required. So I think these are questions that at the end of the day, the government has to address, in the sense that have to make a better territorial development scheme to allow the local governments to take charge. So yes, I fully agree with you. I know the traffic here was bad before COVID. Bad has returned now.
Thank you so much for the useful presentation. Just I don't know much about the Kazakhstan economy, but I just wondering, I thought from the newspaper and the media, Kazakhstan is one of the developing country set up the right goal and the procedure in terms of open economy and in the Central Asia. Do you think the Kazakhstan need to more open, or is it a proper amount of open? What I mean is, as you said, like a special economic zones, SEGs, it means like I don't know how many SEG Kazakhstan has. So that was some related to the free trade, FDI, so direct investment, and then what was the do you think it's Kazakhstan economy need to more open, or is this the right amount? What I mean is another mean is as far as I know, foreigners have a limited, not allowed to buy a property or some house and these things. And I think Kazakhstan has a big rent and comparing to the population. So maybe it is better to import or more people come and then invest more. That's why how to develop the human capital and then infrastructure or these things. So I'm thinking Kazakhstan government a little bit scared to open too much the economy. So how do you think about this?
Okay. I'm going to ask my colleague Shamsu, who is our country economist, to respond. But let me say, I mean, I think you're asking a very good question. For FDI, there are areas where FDI cannot come, telecoms and other areas. So should it be more open? I mean, other countries have opened up. There could be reasonable measures to take to protect, parts of the telecom sector broadly that is really related to national security. But there are many areas where there could be more FDI. There's a lot of FDI that comes into the oil and gas extraction. There's much less FDI coming into manufacturing, right? Other services. So yes, certainly, I fully agree with you. Should be more open and would bring more FDI, would create more jobs, would higher paying jobs. I mean, when we thought about Central Asia, I mean, before COVID, because COVID brought new challenges, when we thought about Central Asia, and Kazakhstan's role in it, then we said, look, there are three major changes happening that Kazakhstan's authorities need to react to. One is the world is changing, no? Whether it's a little bit of the change of globalization, whether it's regional trading blocks, whatever it is, the world is changing. And much more now with COVID, this war that Russia unleashed on Ukraine. The second one, your country is changing. You were almost high income, the aspirations are higher, the demand for better paying jobs are higher, things are changing rapidly. You are probably at what we would call a middle income trap where you need to take extra efforts to jump to the next level of development. But third, and I think very important, is that the region is changing. 20 years ago, 15 years ago, 10 years ago, if a foreign investor thinks of investing in Central Asia, I mean, okay, the population is not particularly large, right? What is it, 33 in Uzbekistan, 18, and maybe 60, 70 million. It's not a very large region. It's the size of the UK or France, but think of investing here, they would say, okay, Kazakhstan is our choice. It's not nobody else. Now, this probably is not the case. You have this much more dynamic Uzbekistan next door, and larger population, substantial density that you have to take the country, this country has to reflect in its policy development when it thinks about what we have to do. And so that part of it is that Uzbekistan, even though it had a difficult start after all these years of authoritarian rule, obviously Kazakhstan needs to find a better way. Shamsu, do you want to add?
But my name is Samsur Raja. I'm a country economist here based in Nur Sultan, working together with my colleagues Azamat and also Mehmet. Maybe just quick response. There is actually interesting working paper published maybe 4 years ago, looking at structural reforms in emerging markets, developing and emerging markets. And surprisingly, I forgot the size of the coefficient. So for example, but if I put 0 as the impact of reforms is nothing, and then 10 is the maximum, the issue of openness is, let's say on FDI and trade, is actually, the score is somewhere at 7, 6, between 6 and 7. So it's not like the dramatic, towards the end. What is actually more interesting is actually the domestic regulations that is affecting resource, to move, let's say, the issue that you mentioned, land, for example, whether or not people in your own country can actually, build factories or do agriculture in areas that they think that is, promising, is actually more important than just openness per se, like lowering tariff or. So that, I think, the key message is that yes, openness is important, but then there is also other dimension of domestic regulations that might affect how the resources, if we think about production function, capital labor, and others, so how they actually go across sectors that have the promising return. So, thank you.
Maybe any last minute questions? If there are no questions, Professor Pelizzo had to leave earlier to another meeting, but I'll conclude on his remark on his behalf. On the behalf of Graduate School of Public Policy, I would like to thank Dr. Izvorski and his colleagues for coming and sharing with us some ideas about Kazakhstan's economy. Please join me in giving a round of applause to our guests. Thank you.
Thank you, Dory.
That concludes our